Hey everyone, PSK2329 here. I wanted to do a quick recap on what we've seen the last couple days as far as both macro and micro picture in the market, as well as talk about what I think we're going to see moving forward and a couple lessons you can take away from all this and how to better be prepared moving forward. So today we saw a huge move obviously in the market. You know, one of the two overhangs on the market from a macro picture were in early October. Fed Chair Powell came out with the statements being super hawkish on keeping rate hikes going all the way through 2019, possibly 3 or 4, and as well as interest rates were rising. The market kind of panicked. I wouldn't say panicked, but we saw it caused one of the big corrections we've seen in a few years. So hence we had the big October sell-off. I think it was a combination of things. I don't think it was I think it was a lot of seasonality. I think it was the fact that the market had been pretty much on a 2-year run without any real pullback. So we never really did get that big panic sell, that washout. Everything seemed really controlled. Even though we had a couple big down days, it still we never had the big washout. We never had the capitulation that everybody was looking for. And who knows, we may still get it. You know, chances are less likely, but I do think we're still going to see another pullback. I don't think we're going straight up from here. But a couple lessons to take away. So if you notice the past couple days, so let's go back to like Monday. Okay, so Monday we had a nice gap up from the Thanksgiving weekend, and you know, you could see it holding up with a little profit taking in pre-market. Then we popped out of the gate, sold off on some profit taking, found a bottom, found a base, and then kind of pushed into the close on Monday. Then on Tuesday, we saw another gap up with more profit taking. And this is kind of what we've been seeing the past month and a half. On any gap up, there's been huge profit taking or selling into any gap up. And, you know, rightfully so. I mean, nobody wanted to have a ton of exposure out there, so everybody's locking in profits and kind of resetting day by day, which was kind of what I was doing. And then you saw at the open kind of some consolidation, and then it kind of just gradually grinded higher throughout the rest of the day. You know, kind of midday we saw some more consolidation, and this is kind of what we were seeing. But the nice thing is we were breaking out of the downtrend that we were in, coming into the second half of the day on Tuesday. If you look at more like an hourly, or even you know, if you draw a trend line from here straight down, you know, you could see that we were breaking out of the downtrend. And if you take this out even further on the daily, you know, if you draw a trend line straight down here, you could see where we broke on Tuesday. We would have been breaking that downtrend, and I was looking at it more on the hourly timeline. So that was a really bullish sign. And then we had the big gap up this morning on Wednesday from the overnight futures. And one of the things that so this was my mindset going into it. Okay, first of all, we've had 2 green days, which we haven't been able to put together in weeks. So, you know, I was already like, okay, we need to lock in some profits here. The second thing was, and this is why it's important to understand what the macro events are going on around you, especially if you're playing the market and you have any kind of swing trades going on, or you're trying to figure out what could come the next day or the next couple days, is I knew Powell was speaking at noon. So nobody knew if he was going to be dovish or hawkish. As far as everything leading up to this, it still seemed really hawkish, like he was not going to back down on his rate hikes. There was some signs in his last speech that he might be a little more data dependent, which is definitely more of a dovish sign, and that he was kind of getting this thing figured out and realizing like, hey, maybe the market isn't as great as we think it is, or some of the data is telling us, which is really great because you could tell by the earnings we were seeing this quarter that things weren't going as great as they have been the past year and a half or so. And so I knew, because I was actually holding a couple positions long from this move yesterday, And then, obviously having nice profits at the open. Right at the open, I sold everything because I had a feeling, first of all, we were gapping up really nice. And secondly, everybody wanted to take off any exposure going into that noon meeting, not knowing what to expect. So I just really sat on my hands going into the 12 o'clock hour and locked in my profits. And I would have been fine being done for the day. But I knew coming at noon when Powell was going to speak and his notes would come out that we were going to get a move. Either sell right all of this back off all the way back down to 263 or lower, or we would get this where we'd get a nice squeeze in the market with some buying coming back in, especially when we have all the algos in this world nowadays. Plus, you still had some people with some really good sized put exposure on, and you knew this kind of squeeze was going to happen if the market popped. So right at noon, the notes come out that he's a lot more dovish. He's kind of backing off on maybe saying, hey, maybe we don't need as many rate hikes. Maybe we can get there with a little slower pace, which obviously the market loved. So as soon as the SPY popped, I immediately looked at Amazon and Apple because I knew that those two had been beaten down, but they were showing signs of life and they were holding support and starting up on a trend. And Apple or Amazon was kind of lagging behind the SPY. So I immediately went to the calls, loaded up on the 1660s, and then the thing just took off. I was so lucky that I was quick to react and timed it perfectly to grab all those. And then I just scaled out kind of when we got up here, scaled out about 90% of it up here, and then I just let the last little 10% ride, and I closed it out. I'm completely out because one, this was a huge move today, so I'm expecting more profit taking tomorrow. And the other thing to think about is when you have days like today, what we would call like a home run day, these are unicorns. These do not happen very often. So if you can take advantage of them, if you can notice it, if you can recognize it, you can take advantage of it. And the longer you trade, the better you'll be able to recognize that. But my mindset going into every single day is base hits, because 90% or 95% of your trading year is going to be just base hits if you're a day trader. If you go into the market trying to hit a home run every day, you are going to get crushed. You will blow your account up. You will lose bad because you're going to have way too much size. The market might not move in the direction you want it to, and you're caught in like what we saw in October and November. So days like today, you have to just take with a grain of salt and realize, hey, that was a unicorn day. That was a home run day. If you took advantage of it, great. If you didn't, learn from it, know what to expect moving forward, but don't expect this anytime soon unless we get some major China news. So the two market overhangs that we saw were the Fed hike rates and interest rates. The second thing is that the China, the global trade tariff issue. Now, the thing about this and why it's so important is because China and US are the two largest economies, and they pretty much control supply and demand when it comes to global trade. The EU is in the tank. The Asian market is in the tank, regardless of what China may think or tell you or the data shows. If you actually look at the real data and you look at what's going on in their economy and the fact that their market is in a bear market, China is in a lot more trouble than they're leading on or that Xi will recognize or admit, because you can't be in a bear market like that, especially when it's so propped up on their housing and everything else that they have going on. There's such a disparity of wealth in that country. That's going to eventually implode, as well as a lot of US companies knew that this next rate hike was coming, this tariff hike was coming in January. So a lot of companies have been front loading their production. That's the only reason some of their numbers are still staying up, but that's going to come to a dramatic halt. And when that happens, China's really, really going to feel the pressure. So to me, the chances of a deal getting done are greater than not getting done. Now, I don't think that that's going to happen to this G20 meeting this weekend. I think that there's going to be some positive comments come out of it. I would be surprised if there's anything negative, but I don't expect a deal this weekend. I don't think anybody does. So with that being said, what is my mindset for the rest of the week? So I'm actually a little more bearish for the rest of the week for two reasons. One is we had this huge move today, right? So not only do we have this huge move, but we have the G20 coming this weekend, and there's only 2 days left in the trading week. So if I'm a fund and I just went long all this and I have all this exposure going into a major event that I have no idea what the outcome is going to be, do you think I want to have a ton of exposure out there? Hell no. So I expect probably some profit taking at the open. We might see some buying coming in to just kind of chop us around for the next couple days, but by Friday or Friday afternoon, I expect a lot of this to be taken off the table. Not to mention, if you look at the daily chart, what's going to happen next? We're at 275 roughly. Is that where we're at? Yeah. So 274-ish. The most we're going to go is up to this 281, which I don't expect. So, you can kind of see we're coming into resistance, and that's where the market stopped today, is right into this resistance line. So, if we can break over this, see this resistance here, it was resistance. So, it's pretty strong resistance. So if we can break over this tomorrow, which we might do, the next spot we're going to go is what? To this 276. So we're not going to see this kind of move. I don't expect us to go all the way up to 281 and double test this week. Obviously we'll probably see some pullback, probably down to this area, this 272 area, maybe, or 273 area. And then it might chop around and bounce around. But again, until we get, I think the China news is going to be the next major catalyst that will get this market moving on an upward trajectory again. Until we get some positive China news, I think this market will bounce around a little bit. Do we see all-time highs by the end of the year? I don't think so. Not without that trade news. The Fed was great news, but that is not going to impact earnings as much as the China news would, in my opinion. And not only that, like I said, the China news and the U.S.-China trade war is so much bigger than just U.S. and China. It impacts the entire globe. So if that is resolved and there's a positive outcome from it for both countries, that's going to reciprocate into all the other countries. Because if the U.S. can stop China from basically the IP theft and the forced tech transfers and all of that stuff, that's a win for the EU. That's a win for every other country. So, that's huge news. And to be honest, it needed to be done. It's way overdue. It's sad that it took this long. It took Trump to do it, but hey, somebody had to do it, and finally it's getting done. And a lot of countries are supporting it, whether they come out and say it in public or not, but they're going to benefit from it. So what do I expect going forward? So I expect us to come back up here to this 281 level. We'll probably bounce off, come back down, and then we could make a next higher back towards all-time highs. I love this kind of double bottom, W shape, whatever you want to call it. When we get just a straight down and bounce, the one support, the one bottom test, in my opinion, is not as strong as when we test it twice and hold. So, I know some people call this a W, some people call it a double bottom, some people call this, cup and handles, or whatever you want to call it, head and shoulders. Like an inverse head and shoulders of both ways, whatever. My point is, I think we've got the bottom put in the market. Do I think we could come back down and test it? Yeah, we could. If we start seeing selling pick up again, if the China trade stuff goes south and it gets worse, yeah, we could see some more selling. But chances are more I think there's more potential to the upside than the downside at this point, in my opinion. So the rest of the week, I'm not going to be playing aggressive. I'm just going to try to catch whatever's moving, whatever the strongest stock is for the day, play some earnings. But I don't expect the market to do huge moves the rest of the week. Potentially, we could see a nice move on Monday if we do get some positive news. There's a lot of bio news going on, so I'm going to be paying attention to a lot of the bio plays right now. Plus, we still have some good earnings plays. But all in all, one of the reasons that I chose Amazon and Apple is when you look at when you're talking about what are the best plays to grab when the market has a home run day or is super strong that day, you want to find the names that are beat down the most. Which ones have been taken to the woodshed, because those are going to have the biggest rebound and the biggest bounces back, because money's going to flow back into those growth, especially growth or tech companies. A lot of money in October rotated out of tech and out of growth into what they consider value, and value would be companies that have been trading for years and years and years, that have an established PE ratio, they pay a good dividend. They're a really, really safe bet versus something like Netflix or Amazon or Apple or something that's considered a growth stock, or Tesla, that doesn't necessarily have the long-term history or is trading at a higher PE than the rest of the market. So as the market starts to stabilize and things look better for the economy and global trade, money will rotate back into those growth stocks because those have the biggest potential upside. A value stock is pretty much going to be, you pretty much the limit is kind of set. Where it is, where it's going to go, like an Intel or maybe even like a General Motors or something. It's not going to have huge range. GE used to be one of those stocks, but obviously is not anymore. So that's kind of my thoughts on today, and kind of going in tomorrow. I'm out all my positions. I'm not carrying anything long. I'm looking for some profit taking. If we just ramp out of the gate, I'm going to be looking to find the next big spot of resistance and short stuff back down, because we're going to see some profit taking between now and Friday close. So I'm overall macro, I'm still bullish, but for this week, I'm more bearish than bullish, meaning I'm not looking to get super long, and I'm not looking to swing anything, especially through the weekend. I will not be holding anything. But I hope that helps, and hope you enjoyed that. And if you have any other questions or requests for videos, or want any more clarification on anything, always feel free to reach out. You can follow me at PSK2329 on Twitter, or always here on my YouTube channel. So thanks for watching.